AI is advancing faster than any technology in recent history. Studies suggest that it could already replace more and more of the US workforce, especially in customer support related roles. But like every major technological shift, the real impact isn't just about jobs. It is about your daily life and your financial future. You have probably seen AI through chatbots or different fun tools online, but the biggest changes are happening behind the scenes. AI is quietly shaping how the systems around you work. It influences the companies you rely on, the prices you pay, and the services you receive. And most people have no idea that it is happening. But AI doesn't just influence your bills. It also changes how businesses operate, how they serve their customers, and manage their employees. Restaurants, manufacturers, and service companies are all adopting AI to improve efficiency and cut costs. They are also using it to respond faster to ever-changing demand. These changes affect the products, the services and experiences you rely on every day. For example, restaurants are using AI to improve their operations. During promotions, such as the $1 Frosty deals, Wendy's relies on AI-driven supply chain management. The system helps the company to track inventory in real time. It makes sure that they have enough ice cream mix and packaging as well. This prevents stockouts when orders surge. Wendy's is also using AI to improve the customer experience in their drive-thrus. This makes ordering faster and more accurate. It uses AI to understand customers' spoken orders even when they ask for something that isn't technically on the menu. For example, if someone asks for a large chocolate milkshake, Fresh AI knows that you mean a large chocolate frosty. Associated Materials is a manufacturer of doors, windows, cladding, and other real estate related products. And they have adopted 10 AI use cases within just 9 months. And as a result, they have increased their on-time delivery rate from around 40% to 90%. Trinity Rail redesigned its inventory workflows with the use of AI, which saved them $30 million and improved their margins. And then you have Lando Frost, which is a family-owned company that produces sliced deli meats. They have used AI to reduce production planning from 40 hours to just 30 minutes. This helped to protect the company from supply chain disruptions. These changes directly affect you as well, because companies that adopt AI early tend to expand, while companies that ignore AI risk falling behind. AI is reshaping the stability of your income by reshaping the performance of the companies you rely on. Healthcare might be the most important area where AI affects your money because medical bills are one of the top causes of death. Hospitals are now using AI to predict patient demand and organize bed capacity. But it is also helping them to shorten their wait times and reduce emergency room overcrowding. Nebraska Medicine used AI to improve the efficiency of its discharge lounge. This allowed patients to leave faster and freed up more beds. The Cleveland Clinic used AI to reduce the time it takes to calculate bed capacity by 75%. This sped up the entire patient flow. Tampa General Hospital reduced patient stays by 30% with the AI-supported systems, and this also lowered their operational costs dramatically. When hospitals reduce their costs, insurers also pay less for patient care. Insurers who pay less face an increasing pressure to pass those savings on to their customers. That means that AI could eventually lower premiums and deductibles as hospitals become more efficient with time. Even if you never see the technology yourself, its impact may show up in your medical bills. AI is transforming how banks open accounts and process new customers as well. Citibank is a good example. They have applied AI, which reduced the time to open a new account from 9 days to seconds. But not only that, the number of people needed to open an account dropped from 50 people to 1 person. Implementing AI also reduced speed to market by at least 90%. This improvement applies specifically to onboarding accounts and completing the Know Your Client checks. This means that customers get faster service with fewer mistakes. But it also means that employees spend less time on paperwork and more time helping their clients. For you, the customer, this results in quicker approvals, easier onboarding, and fewer delays. AI is removing the friction that has slowed banking for decades. Insurance companies are using AI to analyze data that was previously impossible to evaluate at scale. Instead of relying on age, location, or simple historical data, AI models analyze thousands of factors at once. These systems analyze patterns in claims, weather forecasts, and even economic conditions. But they can also assess supply chain risk. Companies like AIG expect AI-driven underwriting to significantly improve accuracy. And they also expect it to double parts of their business growth. For consumers, this increased accuracy can be positive or negative, depending on your risk profile. Because low-risk customers may benefit from cheaper and more personalized insurance. But high-risk customers may face higher premiums because AI can detect indicators of risk that humans often miss. AI essentially makes your risk profile far more detailed than before. It increases accuracy, but it also increases scrutiny. AI is increasingly influencing investing and long-term wealth building as well. Companies that use AI effectively often grow faster, reduce waste, expand margins, and generate stronger returns. If you invest in index funds or retirement accounts, the companies in your portfolio are already being shaped by AI. Some analysts believe that banks using AI at scale may eventually be valued more like tech companies in the future, because their cost structures and efficiency resemble those of software companies. Even if you never invest directly in an AI company, AI is influencing the earnings and performance of the companies you already own. Your wealth is being shaped by AI whether you realize it or not. The most important thing to understand is that AI is not just changing tech, it is changing the systems that manage your financial life. It is transforming how banks approve loans, how hospitals operate, and how insurers judge risk. It is also reshaping how companies hire and grow, and even how you build wealth. Many of these changes are invisible, but they are already affecting your wallet today. The people who adapt early and stay informed will have an advantage. Those who understand these shifts will be in the best position to benefit from the new financial landscape. Thanks for watching, and please give it a like, subscribe, and watch another video. See you in the next one. Thank you. Bye.